When we think of great growth ETFs, we think about the big dogs, QQQ, VUG, or even VGT. But a lot of great ETFs are out there. And one of the ones that are coming out that people are starting to talk about is SCHG. And this is the Charles Schwab Large Cap Growth ETF. And the reason it's been coming out is because, people have seen that it's performing well, it's got low cost, and it's got some great benefits in adding to like a good ETF like SCHG. Now in today's video, we're going to talk about 4 reasons why I think SCHG is a great growth ETF to make you rich. And at the end of the video, I'm also going to throw in some reasons why maybe it's not the best. So let's start off and let's get going. Hey guys, my name is Steve and I run the Frugal Expat website where we try to help people to save more and invest better. Today we're talking about SCHG. So if you like this content, make sure to smash that like button and subscribe. And let's get to it. Now, SCHG, like I said, is the Charles Schwab Large Cap Growth ETF. It's got about 230 different holdings. Its price is around $28 to $29, depending on the day and depending on when you watch this video. It has been around since 2009, so at the top of the GFC, it was created, and it's been soaring the last year or two due to the AI and tech that it's holding in its portfolio. And it's doing a lot better in cost compared to VGT and QQQ. Those are getting a little expensive. All right, let's get to it, to the 4 reasons why I think it is one of the best growth ETFs to make you rich. Now, first of all, it's got a high concentration of tech and AI. With the Mag 7 creating a good portion of this portfolio, you are having some of the great benefits of this tech and AI boom. The AI companies are continuing to come out with some great innovation. Now, it's kind of hard to pick and choose which companies are going to be making it great, and these companies are starting to get a little expensive. Well, SCHG makes it possible. With Apple, Microsoft, and Nvidia making 30% of this portfolio, and you also have Amazon, Tesla, Google, and Broadcom making up part of the top 10, you can have some of this Mag 7 production, and that's great news to you. Now you can just buy one fund and hold all the Mag 7 together, and that's good news. So if you want to hold those Mag 7 stocks and create a rich portfolio, SCHG should be on that list. All right, let's get on to number 2. And number 2 is going to be the low cost. Yes, SCHG is low cost. When we're looking at expense ratios, having a lower expense ratio means you're just keeping more money in your pocket. And if we look at SCHG, it's got an expense ratio of 0.04%. It is very cheap to hold in your portfolio. Now, if we compare it to other ETFs, QQQ has a 0.20% expense ratio. If you want the cheaper version, as in QQQM, that's still 0.15%. VGT is 0.10%. Wow, and at 0.04%, SCHG is beating all 3 of these ETFs. That means more money in your pocket. Secondly is that SCHG has a low share price. Its share price is sitting at between $28 and $29. It did have a split in October, making it much cheaper and much more accessible for everyday investors to get into these growth ETFs. QQQ's price is sitting at $538. VGT's price is sitting at $624. But SCHG is sitting at $28 to $29. That's great, because now if you don't have like a portfolio or a brokerage company that offers fractional shares like M1 Finance or Fidelity, you may have to buy that whole share, and forking over $624 just for VGT, that is so hard to do. But if you have $28, wow, you can now buy one share of SCHG. That is great news for those people that may not have the tons and tons of money to invest. They may have a little bit, so getting one share at a time could be the best thing they can do. And at $28, that is easily done and simply. All right, let's get on to our third reason why SCHG is one of the best. Now, the third reason SCHG is one of the best, it has a better performance than the S&P 500. Now, the S&P 500 is a gold standard when we're looking at portfolio performance. You know, you've got the top 500 companies, and historically, this is done pretty well over the long term. And if you are just an average investor, you know, just putting your money in an S&P 500 ETF or index fund could be just the best way to invest. You don't have to pay those CFAs or CFPs all that money just to kind of outperform the index when you just buy it and hold it forever. Now, if you want a little bit more growth, SCHG makes that happen. And let's take a look at some of the performance over the long term. If we take a look at the 1 year performance, SCHG has done a little bit better than 29% in 1 year compared to the S&P 500, which is doing about 23-24%. At 3 years, we have 63.3% compared to 45.5%. That's great news. Now let's look at the 5 year. 5 years is 133.91% compared to 95.5%. At 10 years, we have 365.7% compared to 249%. Now look at those numbers. Now that's great news. Now if we were to, like I said, invest $10,000 into SCHG over the next 10 years, and compared that to the S&P 500, you would make about $12,000 more investing into SCHG than into the S&P 500. And we can take a look at that if we backtest it. So let's take a look at our backtest. Now, if we take a look at the backtest, we will see that, you know, SCHG, if you invested $10,000 10 years ago, would have came out to about $46,247. Now the S&P 500 on the other hand would be $34,451. So that's a good $12,000 more investing into SCHG compared to the S&P 500. And that's great news. It is outperforming the market in a 10-year period with ups and downs that you can possibly stomach, and you are making more money and getting rich faster. All right, now let's take a look at our fourth reason. Our fourth reason is going to be it's creating a great two-fund portfolio. Now, SCHG is a great growth ETF that you can combine with some dividend or value ETFs. One of my favorites is SCHD. Now, if you were to combine SCHG and SCHD together, you will create a great portfolio that can outperform the S&P 500. Now I just showed you just how SCHG outperforms. Now if you combined it with SCHD, you're making a great two-fund portfolio that can provide value and growth, and it will become like a dynamic duo of a portfolio. Now most people, like I said, is going to invest and get that core S&P 500 and add some dividends and growth to kind of grow that portfolio. But if you just had these two with the value and growth together, you will take some of the great things of both. You get high dividends in the value, you will get high growth with SCHG, and you will, like I said, outperform the S&P 500. Now, if we take a look at that same $10,000 and we took a look at what that portfolio will do in the long term, you'll see that in this 10 years, it will outperform the S&P 500 1.3% annually per year. That's amazing news. And if you invested $10,000 in that 10-year span, you'll come out with $38,277 compared to $34,451. That's great news. You are now outperforming while creating a great value and growth. So when those bad times do happen, the value fund will help it stay stable. When those good times are happening, the growth fund will help to push it forward. So that's another great reason for SCHG. Now, these are just 4 reasons why I like SCHG and why I think it is a great growth ETF to make you rich. Now, with every great thing you have, there are also some cons. Now, one of the cons is having a short time horizon. If you're close to retirement, SCHG is not a good ETF to hold because crashes do happen. In 2022, SCHG did go down about 33%. And if you're getting close to retirement and you need that money, well, taking a big dip like that could be detrimental for your retirement, and you may have to work an extra 1, 2, 3, or even 4 years. So if you have a long time horizon, like a young investor, like maybe me that may have 20, 30 years left of work, SCHG is a great ETF to have. If you have a short time horizon, things can happen. You know, the Mag 7 may not be so good in the next year or two, but it could be good in the next 5, 10, 15, or 20 years. So think about that. Number 2 is going to be, it has a low dividend yield. So if you're a dividend investor, SCHG may not be the ETF for you. It's got a 0.38% yield, and that's just not giving you the dividends you may be looking for. You know, you can get better dividend yields with QQQ and VGT. Both of those ETFs have a dividend yield above 0.5% and getting close to 0.6% respectively. Those are better with creating dividends than SCHG. So if you're looking for dividend yield, SCHG may not be the ETF for you. And the third reason is there could be better growth ETFs to hold. Now, like I've mentioned, QQQ and VGT are 2 great ETFs. QQQ holds more tech. It's got about 60% tech, while SCHG's only got about 47% tech. VGT has 99% tech. So if you want more tech and you want a better growth ETF, there's QQQ and VGT. Now, not saying SCHG is bad, but SCHG hasn't been around as long, and its performance does slack a little bit behind QQQ and VGT. Now, if you are a young investor and you're looking for a great growth ETF to make you rich, SCHG is that. And some math, if you put it together, if you started off with an initial investment of $10,000 10 years ago and invested $1,000 every single year, so that's about $12,000 a year, times 10, so that's about $120,000 in that time period, you'll come out with a return of $348,710. Think about that. You're only investing $1,000 per month, but you're getting a great return in that. If you were to increase that just a little bit, it will increase your amount of return in the process. That's beating the S&P 500 by a good bit. And that's amazing news for those that are looking to grow your wealth, not for today, but for 10 and 15 years down the road. SCHG is one of the best ones to make you rich. And all you have to do is start today. Open up a brokerage account, continue to invest, and start today. Now, if you are looking for a good video about the breakdowns of SCHG versus QQQ or QQQM, check out my link up above, and I'll show you what I think about it. All right, until next time, see you guys.